I see two things here which are fundamental to Megatrends. One is time and the second is the impact.
I started moving from a concept of buy and hold to buy and watch.
I think that being at the right place at the right time is sufficient but not necessary.
Megatrends actually helps investors identify some of these trends.
Hello folks, I am your host Anupam Gupta and this is Bajaj Finserv Mutual Fund presents Megatrends Investing. We are diving deep into the fascinating world of Megatrends. I am thrilled to introduce our distinguished guest, Nimesh Chandan, Chief Investment Officer at Bajaj Finserv Mutual Fund. Nimesh, thanks for joining us. I'm really excited to pick your brain on this fascinating topic.
Thank you, Anupam. Happy to be here.
Great. So let's start. I have to ask, before we get into what exactly is Megatrends, what drove you to this idea?
It's interesting actually to keep myself updated and keep learning about the markets. I regularly meet investment experts, strategists, and discuss investment ideas. In one such discussion, we have four of us sitting and having coffee. One of the guys actually said, this buy and hold investing is dead. And being a long-term investor, I took a bit of offense at that. How can you say that? It's crime to say that. And then I thought maybe the other two gentlemen who are with me will cut in and probably argue against it. Surprisingly, those guys also agreed. So then it was on me to really hold the baton of long-term and keep fighting. But through the discussion, when I heard their perspective, I found out that they were not against long-term investing. What they said was, economies, businesses, consumers are going through so many changes every few years, maybe 5 years, 10 years, that the reason you invest in a company may no longer be valid. So erstwhile, when our investments were done by a father or grandfather, they invest in a company in an IPO and then hold it for 15, 20 years. They said in the last 20 years, there have been so many changes that we can't do that. So then I started moving from a concept of buy and hold to buy and watch. So you invest for the longer term, but you keep track of businesses, trends that are affecting their businesses and returns. So that the reason you entered into a particular business as an investment, it stays that way. Megatrends is actually not a new word. So it was coined in 1980s by John Nasbitt. He had written a book on that. Basically, it was talking about how the next investment market is Asia, and he was driving people towards this side or getting their attention to this side. But then slowly over, say, from early 2000s, this has become a more broader concept that a lot of investment managers globally are looking at. So this actually took me to Megatrends investing and to prove some people wrong that you can do long-term investing by watching trends.
It's fascinating, right? Because when you look at the stock markets, retail investors usually like to think of it as thematic and sectoral and, this sector, that sector, this theme, that theme. Megatrends has a very unique feel to it in the sense that it sounds much larger, right? So how would you differentiate the concept of megatrends with these things like, sectoral thematics and all that?
So change is constant, and we have to live with change every day. Some changes are quite widespread and they impact a larger part of economy, businesses, and companies. And they stay also for a longer time. So those are mega trends. These are long-term changes that have a wide repercussion on different areas of the economy and businesses. When you come down to sectoral and thematic thinking, typically you focus on one business and then see what are the trends in that business, or one theme and what are the trends within that theme. Mega trends investing, as you said, is much broader, where you identify which are the important changes happening and then identify which are the sectors that benefit from it, which are the companies that benefit from it, and which don't. It doesn't have a particular boundary of a sector. It can go beyond the sectors also. Like, for example, technology changes like having a nice selfie camera actually led to higher cosmetic sales. So if you look at technology changes only for tech sector, you may miss out on some of the changes that are happening there. So it's a more broader term. Also, what we found was when looking at sectors and themes, typically when investors come into those sectors or themes, it's with a hindsight bias. They saw the sector doing well for 2-3 years and now they start investing there. Mega trends actually helps investors identify some of these trends early, invest in those sectors or themes in a more diversified way but at the right time, and also exit at the right time. So I think that's where it's more broader and more diversified theme compared to sector or thematic investing.
I see two things here which are fundamental to megatrends. One is time, and the second is the impact. Right?
Yeah.
How would you define time here? Because when we look at other sectors, we look at maybe something like a regulatory change, something that will have a short-term impact, and then you move on.
Yeah.
We see that happening in a lot of sectors, happening either because the law has changed or the government has certain point of view. But when it comes to mega trends, why is time so important?
When in the ancient times, in southern India, the kings used actually developed navy and maritime, like cruises where they used to go to other countries for trade or maybe invasion or so. They used to follow either the stars as to which direction they are going. The other way they used to do was they used to take more birds with them, which were more land friendly, or they wanted to be on the land, and they would release them in the middle of the ocean, and those birds would fly to different directions, and the ones that don't come back in a direction they went and don't come back, that means there is land there. So they used to actually take some guidance from the stars and where people are driving. So in megatrends investing, identify through data points what trends are important, which are gaining pace, which are not. Some may come as fads and go away, so it is possible that they may not sustain. So through tracking businesses, tracking data points, extrapolate whether these will stay for a longer term. Is there enough force in that trend to stay longer term? Now, when investing on mega trends, you have to be a little bit careful. In the initial build up of the trend, you may not find many players to invest in. The universe may be small. At the fag end, you may not get the right valuation because it's discovered by people. So you have to catch that juicy middle where it is in that growth trend, and hence timing becomes a little important. Also, if you see success stories globally, some of the big businesses like YouTube, Airbnb, and all such businesses, even in India, the tech sector or the chemical sector, as we say that there's nothing beautiful than an idea that whose time has come. And many of these businesses got their timing right. In fact, there was a study done by Bill Gross, who's one of the founders of Idea Labs and the investor in hundreds of businesses. He said, we studied all the startups, maybe 125 startups or so we studied, in classifying what factor worked for them the most, whether it was the business idea, whether it was the management team, whether it was the right availability of funds, whether it was the timing of the business when it started. And he found for majority of the cases, the timing of starting that business was more critical than the other factors. So I think megatrends investing and done right gives you that advantage and gets you into the growth phase of businesses.
So, I'm sure that a bunch of our audiences listening to this and understanding this, I'm sure the question is, how does this affect me? Why is this important for me? You're doing all the thinking here, but what's in this for me?
So I tell people generally to close their eyes and think of some business that they will invest in for the longer term. So you can take 5 years, 10 years, and maybe not one, but maybe 5 ideas come up in your mind that this is the business I would like to invest in for the longer term. I would want to stay with it for 5 to 10 years. Without knowing what you have thought of, I can tell you it will be a business that you are very bullish about future growth.
Correct.
Right? Where you may not remember the exact valuation today. You may not remember the exact cash flow profile or the ratios that the business is doing. But one thing that gives you confidence that if I want to invest longer term, I need to have business that grows. Mega trends investing is a very systematic way of identifying future growth. One way is that you go to a company and company tells you that I'll grow at so and so percentage for the future. I'll grow at say 15% compounded or 20% compounded for 10 years. Rather than just taking the company's word for it, suppose you find that there is a trend, maybe it's towards electric vehicles or digital payments, and there's this company which is positioned right there. Then you're more confident about the future growth of that company. So any serious active investor in the market will be focused on the future of businesses, and they will want to use megatrends investing. Even businesses, when they allocate their capital, any corporate that allocates capital, they would want to invest in an area which they see growth in. And megatrends helps in identifying those areas.
I was reading your book and I found the sources of megatrends to be very interesting. So T.R.E.N.D.S, out of which each of those letters stand for something. Let's walk through that.
So I must confess that this was coined by me to make it a little easy to remember for people. If you see worldwide, people look at different sources of trends and they have made acronyms like PESTEL or something like that. I thought trends is easier and it covers the important 6 areas to think about. So T stands for technological changes that come. And I think technological changes cannot be, the importance of them cannot be overemphasized. They lead to dramatic changes in the way businesses operate and the way economies grow. Technology changes like, say, UPI payments or artificial intelligence, they impact many businesses. We spoke about like just a selfie camera change can lead to a different fortune for a business. So technology changes come as T, where you look at all the changes originating from technology changes. Second comes as regulatory changes, and this is becoming very important as worldwide governments are getting more involved in the business, in regulations, in trade practices, in geopolitical risk. Regulatory changes can help a particular sector or a business or a theme, or they can be against them. So you need to be aware of regulatory changes that are coming and how the government is thinking. Economic changes come when a country is moving from, say, a emerging market to a developed market, rising per capita income, then changes in infrastructure spend, the changes in consumer behavior, and so on that comes in. Then we come to nature or sustainability changes. And this is also becoming important, especially in the last few years, where people are very conscious about what they are consuming, how it affects the environment, and so on. And taxes are changed based on these changes that you impact the environment. D is demographics, and this is where India is placed very unique in the world, where we are having favorable demographics, young population, and their spending and their choices are a little different from the aging population also. So how does this segment, how will they develop, and what kind of things they will consume, how they will save, how they will invest, those changes. Social changes are mainly about consumer behavior changes, as to, like, people prefer a particular lifestyle, people prefer a particular way of living. Consumer habits may change, their brand preferences may change, they premiumize somewhere, they want easy consuming at some point, like doorstep deliveries and all that. Look at these 6 areas, which is technology, regulatory, economic, nature, demographic, and social changes, and try to map changes that are emerging from them. Sometimes they may just coincide together and make it a stronger trend, and that helps the businesses even much better. So the idea is to have more scientific approach towards identifying these trends, so that you are able to map them and you are able to analyze and take opportunities in them much better.
It's a refreshingly different approach towards investing. It seems a lot like you're looking at a much more bigger picture than just economy sectors. This looks a lot like also looking at technological changes, societal changes, and all. I mean, do you think that's true? Because you are also going into some level of first order thinking, second order thinking, and given that you've done so much work in behavioral investing, I'm just thinking if there's a pattern where I'm trying to connect some dots out here.
So you're absolutely right. It is much more diversified way of thinking. It is much more longer term way of thinking. And see, when short term investors are investing, they are looking for the direction of the next tick that comes in the market. When a long term investor is looking at the market, they are looking at the next direction of businesses. And that is where Megatrends investing is different from the others. It is a way of looking at top down. We can later talk about how it helps in bottom up
Bottom
also.
up, yeah.
But it is a more formalized way or scientific way of looking at top down investing.
You think that India's current economic trajectory post liberalization is also very unique in the sense that no other country in the world with such a large population is seeing this amount of trends, which are changes that are happening. China, of course, had its own changes that happened some time back, but they're not entirely a free market. Do you think that India is really a fertile ground to do mega trends investing?
Absolutely. I think in terms of entrepreneurship in India, you see so many sectors contributing, so many companies contributing to the profit pool in India, so many companies participating in the formal corporate sector and increasing, right? You are seeing more and more companies listing, choices for investors are there. So it's a beautiful place. And we are at a beautiful time when we are moving towards Viksit Bharat, towards 2047. It's an amazing place to map out some of these trends. The good thing is you have certain lead indicators already showing up. And hence, it is easier a little bit to extrapolate in the right way some of these non-linear trends also. So India is a beautiful place to be in investing right now, and mega trends definitely helps in identifying the right businesses to be in.
Nimesh, some historical perspective here, right? Like we spoke about how India is a fertile ground. India itself has seen a lot of mega trends that happened. And one thing that always sticks out for people who have been in the market is the 1991 reforms and what happened after that, right? Because a lot of mega trends emerged from there. You want to talk about some historical perspective to this?
So I'll divide it into two parts. I'll talk about some specific cases globally and maybe some trends that we would have invested in if we were doing megatrends investing from the 90s, like you mentioned.
Yeah.
So let's look at some of the iconic names that have done well for wealth creation globally. And the one that comes to mind is YouTube, for example. YouTube started in 2005, and it is the best video sharing platform that people use. When you actually go back to history, weren't there any video streaming platforms earlier before YouTube? There were many. In fact, towards the late 90s, there were many companies that started this video sharing and content sharing apps or softwares. But they had a important constraint. The bandwidth that people had during those times in the internet was not much, and you could not stream these videos. Plus, the formats were very different. If you remember, earlier we used to put codecs to actually play some videos, like this is .mov, this is .avi, and so on. Many of these companies could not get their second round of funding or enough funding to survive post the dot-com crash. When YouTube came in 2005, broadband was almost everywhere in the US. There were standards of video streaming that were there. And one of the founders actually had said that YouTube was ideally designed for video dating. They were not even thinking of video sharing as a platform. But the timing that they came with was so important that the same idea clicked very well when its time came. Airbnb, Uber, they started during the financial crisis.
Yeah.
Airbnb got more houses to rent or so because people wanted an extra income. They had invested in the real estate, but they wanted an extra income because they were going through crisis. Drivers were available for Uber because people wanted an extra income. So the timing of some of these businesses was right, which took them to the next level. If you look at India, and I'll talk a little more about sectors rather than just particular stocks, which I'm not able to. If you see, when in the 90s, telecom industry developed and there were technology changes coming like Y2K and all that. Technology changes plus the demographic benefit that India had. We had a large, young, English-speaking population that could actually help in the software development. When these two trends met, the technology and the demographic trends met, it led to a growth in our IT sector. And it continued for a very long time, right? If you look at even the chemical space, I remember there was a time in, say, early 2000, chemical companies used to be trading at a multiple of 5 PE or 10 PE or something like that. Nobody really, right? Then the world started talking about China plus one. There were some issues of environment in China where they shut down some of the businesses or so. Regulatory changes plus environmental or nature changes actually helped some of the companies in the chemical space in India to take that wave of outsourcing to India or setting up businesses in India. So if you look at, there are large mega trends at work when they push up companies to the next level, or they provide a tailwind to the companies that have the ability to milk these mega trends.
There are a lot of concepts that we assume to be true that seem to be getting shaken by this. I'll tell you one is first mover advantage. Does it even exist in today's day and age? Right? I mean, mobile phones is one of the best area that I look at when to say that what first mover advantage. You've got incumbents who were dethroned very easily. Okay, so first is that. Second is, I think that being at the right place at the right time is sufficient but not necessary, or necessary but not sufficient, because the examples that you gave seem to show that you need to have a smart guy at the business also to take advantage of the megatrend and not get dethroned by somebody else.
Yeah.
Disruption is very easy. Okay, can we talk about that for a while?
You actually mentioned that about first mover advantage. I think a right mover advantage is better than a first mover advantage. And you spoke about mobile phones. I remember listening to Steve Jobs in 2007 when he unveiled the first iPhone. He said, all we have done is take out the buttons, right? Your keys on your keypad that were there. He removed those. He said, now every app will have their own keys. So we don't need to actually have keys on that. that technology shift actually hurt the incumbents because the guys who are very strong in hardware, like a Nokia or a Motorola, and that's my opinion, that those guys used to have 33-34% market share, each of
Yeah.
them, before iPhone. And within this change, you suddenly saw guys like Google and all come with their softwares and their phones coming in. By 2017 or 18, I think after 10 years, both these guys were reduced to about 1% or 2% market share. So technology change uh, dethroned some of the incumbents and helped the new players take over. So yeah, actually, these are some of the historical examples that
Yeah.
you see when trends are on your side and you are getting the tailwind of them. You have a potential to do better. When they are against you, you need to rethink your business models if you want to capture those.
So one of the most memorable disruptions of the iPhone and the camera was physical cameras.
Yeah.
We know what happened to that, So I find that interesting because, like I said, being at the right place at the right time might just give you some advantage, maybe for some years. But the entrepreneur or the person who's running the company also needs to have much more than that. Do you think that's also that's also key?
In India, and as we spoke about, that there is a huge potential for many businesses to grow, to do well. But there are few who do exceedingly well in capturing that growth. So the idea is to combine the two disciplines of top-down investing and bottom-up investing into this to see the potential for growth and then the ability for growth.
On that note of positivity, that is a wrap on this episode of Megatrends Investing. My guest, Nimesh Chandan, CIO, Bajaj Finserv Mutual Fund. Nimesh, thank you so much for shedding light on the fascinating world of megatrends for our audience.
Thank you.
Thank you.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.